So this is, I would like to thank the American Society Council of the Americas for this event, the 2017 Latin America Cities Conference. For me, it's a pleasure. I would like to thank all of you that are present, President of the Apex Brazil, Mr. Roberto Jaguaribe, Susan Siegel, that I know for some time, President and CEO of the American Society, the Council of the Americas, the several ambassadors here, other authorities, the press, ladies and gentlemen. I'm going to talk a little bit about the global economy, and then I will continue and talk about the prospects for Brazil. The current world economy is particularly complex, or if you want, interesting. On one hand, we have quite a bit of political uncertainty in the global arena. Here I'm talking about uncertainty. I'm talking about geopolitical risks. But at the same time, we're facing a context where there is a cyclical recovery in most of the regions of the global economy. So let's start with the uncertainty. We do have uncertainty of policies in some important advanced economies. We're talking about issues like trade. Are we going to continue on the trade path of globalization, liberalization that we had in the last decades? Or this will change? Are we going to face deglobalization? How this will impact the global economy? In the case of Brazil, we will have more of an indirect impact. Brazil is still in its early stages of opening up. So the trade size of the Brazilian economy is still limited. So the direct impact of any trade measures will be directly limited. However, if the global economy slows down, if you have a general lower productivity growth, it will affect all the economies in the world, advanced, emerging, including Brazil. There is also uncertainty regarding the normalization of the monetary conditions, in particular in the US. Interest rates are going up. There is an expectation of fiscal expansion. The economy seems to be in the US close to full employment, and this may lead to higher interest rates in the US. In other regions, as in Europe, it is more likely that the stimulus will generate growth, but not really monetary policy response in the short run. This asymmetry between the stage of the cycle in the US and other countries tends to put upward pressure in the interest rates in the US, but also tends to strengthen the US dollars. For us, Brazil, we are quite resilient at this point. The balance of payment is in a relatively strong position. I will give you just 3 figures. First, our current account deficit last year was 1.3% of GDP. It's a number relatively low by international standards. Brazil had a current account deficit of almost 4.5% just a few years ago. So now we are at 1.3%. FDI, foreign direct investment, is running at 4.5%. The number last year was 4.4%. So the FDI is around 3 times the current account deficit. And we have reserves in the order of 20% of GDP. So the numbers are 1.3, the deficit, 4.4, the flow of investment, direct foreign, and 20% in reserves. So this time around, from the point of view of the balance of payment, we are much more solid. At the same time, we are more resilient from other aspects. We do have inflation now more under control. Inflation expectations are anchored, which means that our first line of defense, which is the floating exchange regime, the floating exchange rate, has less impact on the rest of the economy given where we're starting off. I started saying that the global economy is complex or maybe interesting because this uncertainty, which I just mentioned that we are relatively resilient. But there's the other side, which is the structural recovery that seems to be on the mind of several market participants. If you've seen in the last 6 months, stock markets are up, risk premiums are down, and this is the perception that the global economy is recovering. And we cannot rule out that this benign scenario could continue for some time. Eventually, of course, growth needs to be set by productivity gains, by investment, by infrastructure, and this will be the next challenge, first in the US, but then in the rest of the world. So where is Brazil in this world? Brazil has shifted course in its policy direction. We can say that we are under a reform agenda, which is not limited to one specific reform. Of course, people give a lot of attention for obvious reasons because it is important. For example, to the approval of the constitutional amendment that capped spending for the next 10, 20 years. A lot of attention has been given to the Social Security reform for obvious reasons, because one of our main issues is the fiscal dynamics over time. But I'm saying that we are under a reform agenda because there was an education reform. There are changes in the oil and gas regulations. We have seen quite a bit of change in main state companies, Petrobras, Eletrobras. We are seeing changes in the National Development Bank. So Brazil, in this uncertain world, is embarking in a reform agenda. The combination of this global world with our reform agenda is paying some fruits. If you look at risk perception regarding Brazil, we have seen one measure like the credit default swap, which reached at the peak of the crisis more than 500 basis points. Now it's at around 230. And I think there is room for further improvements if we proceed with approving the reforms, with continuing in the right direction. Brazil is recovering from a deep recession. The last 2 years were difficult in terms of growth. We had recession for 2 years in a row. But our preliminary evidence or signs are that the economy has stabilized, and we will probably start recovering this year in the first quarter, reaching in the last quarter, when you compare last quarter of this year with the last quarter of 2016, you already will see a growth of around 2.5%. And we are confident that once you get into this recovery, you'll get 2018 in a growth which will be better than 2018. So we expect, given the reforms, given the lower risk, that the economy will start recovering. Of course, for the recovery, there's also the contribution of monetary policy, which is part of the role of the central bank. You know, the central bank has today a role in controlling inflation, inflation targeting, but it also has a role in terms of supervising and regulating the financial system. In the part that controls inflation, we initially were concentrated in trying to anchor expectations so that people will look at inflation for 2017, 18, and going forward, and will believe that inflation will continue to be low in Brazil. Just to give you some of the numbers. For 2017, market forecast, I mean the analyst, which we survey under what we call the focus survey, forecast inflation at 4.15%. So it's a bit below the target of 4.5%. They expect growth next year inflation next year to be 4.5%. For 2019, 20 also 4.5%, which is the current target for 2017 and 18. So we could say that inflation expectations are currently anchored, and the role of the central bank is to maintain them anchored. Once you anchor expectations and the government continues in the reform agenda and the economy shows some slack in terms of economic activity, we see inflation declining in the last 6 months. So we are now, the last number in February, when you look at 12 months, which ended in February, inflation is already at 4.8%. Just 14 months ago, in December 2015, inflation was at 11%. So we went in a little more than 12 months from 11% to 4.8%. And this has allowed monetary policy to start the flexibilization process. We have reduced interest rates by 200 basis points from 14.25 to 12.25. And the indication that this is a process and market expects that monetary policy will continue to be able to flexibilize monetary policy, which is a nice word for lower interest rates. And this is part of the contribution of the central bank for the recovery. Now, the central bank and monetary policy are not the only element for recovery. We need to continue in several elements to really be able to recover and grow in a sustained way. First, we do need to continue in the reform agenda, starting with the Social Security, but continuing with the labor reform, the tax reform. There is an agenda that if you continue, you will be able to increase potential growth in Brazil. Second, there are also what we call the micro reforms. The changes in the way people do business. You improve the business environment. You make the guarantees more viable. You reduce the costs. And here, in this business environment, we are doing in the central bank our second role, which is the agenda, what we call BC+, BC+, which is an effort to reduce costs in the financial system, so that when you reduce the cost in the financial system, you will be able to have a better, more efficient intermediation with lower cost of credit. So in the macroeconomic agenda, there is also the central bank agenda of BC+, which intends to reduce the cost of intermediation in Brazil. There are a lot of reasons why the cost is higher than we would like to, and we are going to work in a structural and a sustained way to reduce it. The third element, so macro reforms, micro reforms, which are the business environments, and the third one is that we need to continue to give incentives for investments and infrastructure investments in particular. We did have some auctions, recently airports, we had transmissions, so things are starting to evolve. We do need more investment infrastructure. So the combination of monetary policy, macro reform, business environment and micro reforms, and investment in infrastructure will give us what we want, which is a sustained and recovery and potential growth going up in the future. I mentioned that monetary policy now is in the process of becoming more flexible, which basically says we are in the process of reducing interest rates. But we are also reducing real interest rates. When you look at what is real interest rates, are nominal interest rates relative to inflation. This is the real interest. So interest rates minus inflation. That's real interest rates. And when you calculate in the way you should real rates from what we call ex-ante perspective, which is looking forward. So if you take a decision today, you want to know what is the interest rate you will earn in the next 12 months relative to the inflation you'll have to pay in the next 12 months. Or if you are in the other side, how much interest rate you'll have to pay in the next 12 months relative to the inflation we're all facing. And this is the key real rate to look for, because this is the rate that people, when they make decisions, they look for. They don't care about what happened 12 months ago or 2 years ago. They look at the future. And here interest rates have moved quite a bit. In the last, for example, if you had to invest for 12 months in Brazil, and you look compare with the inflation, the current level of real rates are around 5%, which is very high internationally, but compared to Brazilian history, it has been converging over the last decades. Just to give you an example, during the 90s, we had real rates above inflation of 20%. The next decade, they fell to an average of 10%. Then we were able to reduce them to around 5%, which are today. But in this average, it included a period that they went to 2%, 3% in an unsustainable way, and they went back during the crisis to 9% real. So from 9% real in mid-2015, we are now at around 5%. When you look not at market interest rates, but you look at analyst surveys, they tell us that they believe interest rates will continue to go down. And when you look at what they expect for the next 12 months compared to these inflation expectations, they are now forecasting a real rate of around 5.3%. So anything between 5 and 5.5. If you want to buy a bond, index bond, which gives you inflation plus something, this something is the real rate. And the real rate now pays you 5 to 5.5%. So my understanding is that this is where the real rates are standing, which historically are lower than the last 3 decades. However, I think we can do more. In order to continue reducing the real rates in Brazil, we have to look at the structural interest rates. In the rest of the world, the structural interest rates are called, in central bank language, we call it neutral interest rates. Because it's the interest rate that will not lead you either to higher inflation nor to lower inflation. It's the neutral that will keep you on target inflation. And this level depends on how efficient is the economy, how productive is the economy. Are you doing the reforms? Is your fiscal accounts under control? In the financial system, it tells you how much free credit you have relative to directed credit, how much intervention you have in the economy and in the financial system. All of this gives you a level of neutral interest rates. And I think we in Brazil are working towards reducing these structural interest rates. And this will help us reduce from where we are today. To finalize, I would like to summarize what I said today. First, I talk about the global economy. Yes, there's a lot of uncertainty, policy uncertainty. There's uncertainty regarding interest rates going up in the rest of the world, especially in the US. But there is also a gradual recovery in the US, even in Europe, Japan, China. They're all doing a little better than before. This will help the global economy. In Brazil, this world is catching us in a moment we are deeply involved in the reform agenda, and we have changed the direction of policies which have helped reduce risk perceptions. This will help us resume growth. We expect growth to recover starting this quarter and continue on in the next quarters and next year too. The empirical evidence has corroborated the important role of monetary policy and the overall economic policy for inflation control. The monetary policy easing in Brazil should contribute to growth, supported by other policies, macroeconomic reforms, business environment, and infrastructure investment. It was important to anchor expectations before the easing process and not the opposite, not start the easing process to expect to anchor later. This is not the way. International experience shows that an economic policy focused on reforms allied to a monetary policy focus on inflation targets leads to long-lasting results, sustainable growth with low and stable inflation. I'm certain that if Brazil pursues the reforms and adjustments, the faster will be the economic recovery and the creation of jobs and income for the Brazilian people. Thank you very much.
Well, thank you very much, Mr. Goldfajn, Presidente. I also just wanted to say thank you very much to the Council of the Americas, Brian and Susan, for the invitation today. As you mentioned, part of the central bank's role is to be constantly evaluating the risks in Brazil and abroad. So I wanted to start off by talking about a topic which I think everyone has been talking about in Brazil for the past couple of days, which is obviously the corruption scandal in the meatpacking industry. As you know, after police unveiled the operation on Friday, several countries and regions have moved to ban exports from Brazil. So we've had China, the EU, Chile, Egypt, and today Hong Kong, I think. Now, given the size of Brazil's meatpacking industry, I think it was more than $10 billion in exports last year from Brazil. Some economists are saying this could actually have an impact, albeit small, on the economic recovery in Brazil. What's your view on that? Do you think, is that an exaggeration, or do you think really this could potentially pose a risk to the recovery?
Now it's going. Hello? Oh, now. The central banks are paid to look for risks. So that's, if you ask me, I can go on and on about the risks in the economy. But this specific risk is a risk that is, I'm not directly involved, and I'm not in the position to comment at the moment. We basically we look at any consequences of any shock to the economy, and we'll take into consideration. We are optimistic that we are going in the right direction. We do face challenges from time to time, but if you look at the last months, you'll see that there is a clear direction, and things have evolved positively.
And just ask another difficult question about the other corruption scandal in Brazil, or the corruption scandal, the Lava Jato scheme at Petrobras. This has obviously caused a lot of political uncertainty in Brazil over the past couple of years. We're currently waiting to see who in the cabinet here in Brasilia could be implicated or could be under investigation by the Supreme Court. To what extent does that corruption investigation and all the uncertainty that comes with it, to what extent does that endanger the reform agenda? Do you think pension reform, labour reform, is that still viable, even if several ministers are involved seem to be involved in the scheme?
The central bank works in a very technical way, in a very direct way. We look at things that appear from our macroeconomic point of view. So we look at things like inflation expectations, growth, balance of payment, asset prices, and this is what makes us decide. So however the rest evolves, it influences us only so far as it has implications to our variables in that regard. We can always, I'm personally optimistic that everything that's happening in Brazil will end up helping Brazil in the future. both the reforms we're doing and all of these adjustments that we are facing.
In your initial presentation, you spoke about the progress that's been made to anchor inflation expectations in Brazil, especially under your watch. Brazil still has a relatively high inflation target of 4.5%. As I understand, it's been 4.5% since 2005, over a decade. It's also got quite a generous target range, a target band of 1.5% for this year, or 1.5 percentage points. What would be the next move? Do you think it's realistic that we could expect a lower target in the next couple of years, or would perhaps you reduce the target range even further? What would be the next move, in your opinion?
The way the institution works is that there is a decision about the target 2 years in advance. This decision is taken on June. So, for example, in June 2017, which is the following June, we will make a decision, not the central bank, but the Monetary Council will make a decision on the target for 2019. We will not make any decision before that. We're going to evaluate how inflation is evolving, how our macroeconomic environment, and we'll make the decision at that moment.
But all being well, I guess it would be an option for perhaps it to be reduced to 4%. Is that on the card?
You know that central bankers, when we say, like what you just asked, it moves markets. You know it, I know it, they know it. So I just cannot answer your question in a very direct way. What I can say is that there is a decision to be taken in June, and we will take it at the appropriate moment.
Okay. And let's just talk about quickly risk outside of Brazil. What do you make of another controversial topic? What do you make of the first few months of the new administration in the US, and how could US economic policy, how could that affect Brazil, either benefit Brazil or hurt Brazil?
There is a lot of uncertainty regarding policy direction. There is the world wants to know where is the trade policy heading. There was a clear trend, which I think will continue, which was globalization, multilateral mutual benefits from trade. You've seen incorporation of a vast majority of poor population in emerging markets being incorporated to the market economy. Here I'm talking about China, India, even in Brazil. We had quite a bit of people, millions and millions, enter what we call the new middle class. So the global economy for emerging markets, but I must say also for advanced economies, were very productive in the last years. So the uncertainty whether this is going to slow down or it will take more time is what's affecting a little bit decisions, investment decisions. In the case of Brazil, we are less affected directly. Our trade with the US or our trade with the rest of the world is relatively small, which we want actually to increase. Our role is to increase it. So our role is to increase trade. We are moving in the opposite direction. We want more trade. But any shock will have limited impact directly. However, if the world economy slows down because productivity is affected, because you have less trade, then Brazil is part of the world and will be affected indirectly. There's issues about the regulation of the financial system. It took the world quite a bit of effort and time in terms of capital requirements, in terms of liquidity requirements and other, to make the global financial system safer and more efficient. So now, if there is uncertainty if you're going to deregulate it or not, is also introduced. My view is that both the trade and the regulation will continue in the way they were, but I must admit there is more uncertainty now. Brazil is relatively resilient because this time around we don't have balance of payment problems. You know, we had famous economists that used to say that whether you have domestic problems, but what really kills is the balance of payments. Now we don't have this as an issue. We have our domestic issues that we are addressing.
Thank you. I think we're running out of time, so I'd really like to open up for questions from the audience. I think there's a microphone doing around somewhere. Well, thank you very much, Mr. Goldfajn. It was a fantastic opportunity to speak to you, and I'm sure everyone found it very interesting. So thank you very much.
Thank you for inviting me. Thank you.